First hour is dedicated 100% to making sure that you guys understand rules, that you understand. Nice job, Jerry. Jerry, we'd love to see pictures of that, especially this being the education room. We'd love to see pictures of what you're doing. And guys, I want to remind you that if somebody in this room says, "Hey, I'm going short, I'm going long," they have a plan in place. Don't don't believe that someone in here is a competent trader and do what they do because they said they did it. And Jerry, I don't want to sound scolding, but I don't want anybody to go, "Oh my God, this Jerry S guy with a green button next to his name went short. I better put my kid's college fund in there." It can hurt the new students sometimes. Um, we are going to talk about today for the first hour a high probability trend trade, ladies and gentlemen. We're going to talk about a trade where every indicator on every chart agrees for your trade, where you have the strongest triggers, where there's no terminations, nothing between you and your target, getting in where the market is most likely to continue. And this is going to be the focus for the first little bit of the day. You can't hear me? Guys, can the rest of you hear me? Anybody? Give me a Y if you can hear me, please. And if nobody gives me a Y, I know that it's me. Yeah. All right, cool. Thank you. And please, if you guys ever jump in and you can't hear me, you can't see my video feed, post in the room. Let me know because sometimes it's on my end. It happens every now and then. Guys, we're going to talk about that high probability trend trade. All your indicators on every chart agree for the trade. This is going to be your foundation. This is going to be the platform from which you grow as a next gen trader. When you focus on this high probability trend trade, what it's going to do for you is it's going to teach you how to read your charts. And becoming a chart reader is the most important skill that you can give yourself. Because trading is cool. Trading is easy. Anybody. If I give a monkey a banana at the right time, I can teach him to push a button and get into a trade, right? But that doesn't mean that he's getting into the right trades. That doesn't mean that he has a statistical advantage. And it doesn't mean that he's going to make $1 million a year and go buy a little monkey mansion. What it does mean is that it's easy to push the button, right? But we want to push the button to get into the trade when everything agrees for the trade, when we have all these advantages in place. So we're going to do that with the high probability trend trade, and it's going to teach you to understand where the market is likely to go, where the market is likely to not go. Let's see. Hopefully Jose sees that. You lost me? Son of a gun. Um, all right, guys. That was the reboot. Can you hear me now? Okay. It's Discord. It's gotta be. Maybe there's a million people on Discord starting a class at 6 a.m. Pacific time, and it creates a little congestion. We had the problem yesterday too, guys. I apologize. I'm not sure how to fix it other than just rebooting the room. So if you guys start telling me that you can't hear me, there's going to be a quick reboot, and hopefully that brings us back every time if we need to. I assure you that is Discord, not NextGen on this point. Um, Going to take the time to learn to read our charts this morning, guys. We're going to understand where the market is likely to continue, where the market is likely to go, and where the market is likely to stop. And these three concepts are going to put you in a position to take that high probability trend trade. Good morning, Debbie. They're going to put you in a position where you can open up your charts and recognize advantages, and then take those advantages and turn them into a high probability trend trade. In your high probability trend trade, there's a section that's called first 30 days and beyond. Focus on simplicity for the first 30 days. Focus on keeping yourself focused on the best of the best because that best of the best turns you into a chart reader. And you're going to see today through a lot of people's trades that once you're a chart reader, a lot of doors open. A lot of opportunities present themselves. You will become more astute at reading your indicators and what they're telling you. It's going to allow you to hold for bigger moves. And it's really going to put you in the catbird seat regarding your day trading. So we're going to focus on the three rules. And this is my Broken record reminder for you guys that are brand new, and I know that I've got some new people in here. Your step-by-step path to becoming a confident trader ASAP is there's two main parts. And the first one is posting pictures in the room, guys. Every time you take a picture, get it in the room. Every time you look at your chart and you think you see something, post it in the room. Ask a question. Our conversations happen with your pictures. Typically, the questions, if you have a question, maybe you're looking at a chart and you're like, hey, Mark, what's going on with crude oil right now? I want you to show me a picture of your crude oil chart and I want you to point to it. And I want you to say, Mark, this is what I mean. What's going on? So this is the NASDAQ, right? I'm going to use my capture software. Let me bring this back up. It's a giant red button. All of you guys have this. It was downloaded. It's part of the indicator download. If you bring up your capture software and click this giant red button, it's going to let you take a picture of one chart, or if you click and drag, it's going to let you take a picture of two charts. This is how we have a conversation, ladies and gentlemen. When you release the mouse, click on the camera that says capture an image. And for you guys that are a little further along in your trading, I want you to try this for me today. Every time you take a trade, I want you to click capture a video and I want you to video the process of you taking a trade. And I want you to vocally talk about what you're seeing. Guys, it is absolutely mind-blowing, eye-opening because you will tell yourself whether or not you're following rules or whether or not you're breaking rules. And it's really, really kind of cool because this will make you better quick. But for the newer folks, we're just going to click capture an image. And when you do, it's going to create this image preview. I have a large chart and I have a small chart. Up at the top, I have a bunch of tools that I can use. I can use a shape. When we talk about termination conditions, that's going to be a textbook termination condition. When we talk about momentum, we're going to look for trigger lines and you may point those out. And then if you have something to say, um, one second, guys. There we go. Let me see if we can get him fixed. Um, use your arrows, use your boxes, guys. They're all click and drag. And then here's a call out button. This call out button, this is where I need you to talk to me. What do you see? Why do you do things, right? How do you feel? All the different things on there that you can use so that you and I can have a conversation because the whole idea of this classroom is for us to talk about what you see, to talk about the trades that you take, to talk about the advantages that are present, and to talk about the disadvantages that are present. And what you'll find, guys, is the more pictures that you put in the room, the more feedback you're going to get. And it's just like sitting on the front row in class in high school. If you're struggling with the subject and you're the kid that raises their hand the most, you're going to be the person that gets every answer that you're looking for. The things that weren't clear will become clear, and you're going to accelerate your learning process. So once I mark up my chart, I'm going to click copy. And then once I click copy, I'm just going to drop it into the room and I'm going to wait to have a conversation, guys. I try to answer everybody's questions in order. I go through the first hour where we talk about rules before I start answering questions. So if you post a picture in there, you don't need to post it 2 or 3 times. You don't need to remind me that you posted a picture. I will get to it. If you notice that I'm looking at pictures after the one you posted, well, then I may have accidentally missed something, and you can remind me then. And then, guys, from the user guide, I'm going to give you this exact same thing. This is your screen capture program how-to. So if that little tutorial didn't clear a few things up for you, go back and watch the video. It'll give you everything you need about taking pictures, posting it in the room. But I want you to embrace the idea that taking pictures is the start to you getting the best feedback. And I invite you folks that have been doing this a little bit longer. If you think, well, I'm not on a demo anymore, I don't want to post pictures, or you know what, I'm at this point now where I went live once, I don't want to post pictures anymore, I feel like I'm taking up classroom time. This classroom is for everybody. The first hour is dedicated to new users, but I want to see your trades, I want to see your struggles, and I want to be able to help you through these things if you need help. The next thing to use is a spreadsheet, guys. Nexgen gives you the spreadsheet. When you download software, you're going to find it right inside your Nexgen Study Picks Plan license agreement. It's right there. You're going to click on it. But what that spreadsheet's going to do is it's going to provide you a place to track everything that you do, every trade that you take, everything that you see. There's a spot for it. And if you set aside 3 to 4 minutes every morning, I'm going to look at what I did yesterday and I'm going to apply those lessons to today. You're going to look at those annotated charts and you're going to apply those lessons today. And guys, here's one of my veterans reminding you, the longer you've been in here, the more you learn by posting. The more questions you ask, the more you learn by posting. They are both one-to-ones, Derek. And if you go to Glossary of Common Terms, it'll go through the technical aspects of it. I'm going to give you the link to it rather than interrupting the lesson now. We can talk about it later. But the yellow one-to-ones are large swing one-to-ones, and then the magenta one-to-ones are small swing one-to-ones. That Glossary of Common Terms will explain the mathematics behind it if you're a need to know the mathematics kind of guy. And then if you have a question about it, let me know. Post it in the room. The yellow one-to-ones are the bigger, more important in my opinion. The smaller one-to-ones may create a bounce, but I'm not using them for entries or termination conditions. Every morning, guys, study what you did yesterday. Study what worked. Study what didn't work. Study what kept you relaxed. Look at what made you nervous, right? And what you're going to find is that there's going to be patterns that repeat themselves, the rules being met that are bringing you success. There's going to be patterns in you that you're going to begin to recognize where you break rules hoping that trades work. And guys, you're going to have days where you hope more than other days. And it's a normal part of the learning process, making those mistakes and then coming back, looking at them and moving forward to them or from them. Those are your synthetic triggers, cream white. And when we talk about entries, I'll go into it a little further. Great question. The steps are nothing but the large triggers on your large chart. We just transpose them over to the small because when they work together, they create advantages. And we'll talk about that on the entries, and I'll make sure to call your name so you don't miss the lesson. Guys, post your trades. Keep asking these great questions. Use your spreadsheet. Go back and review what you've done. We're going to learn the trigger line and Fibonacci rules for when it's okay to trade. It's not my job to tell you when to take trades. I will not call trades in the classroom. I don't want you calling trades in the classroom either. But what I will do is I'll talk about a very simple set of rules that provides an advantage. You're going to simulate those rules every day. You're going to practice them, getting in and out of the market, making mistakes, posting those pictures, finding success, posting those pictures, getting feedback on everything that you do to refine your process to get you comfortable. We're going to simplify. We're going to talk about a high probability trend trade first and foremost. That's going to be our focus for the day. You need to learn the looks so that they're easy. The best way to learn those looks so that they're easy is those pictures, taking those pictures and filling your spreadsheet with rules-based trades, filling your spreadsheet with your favorite looks, the perfect setups. And then if you study those every morning, hey, good morning, Snorri. Welcome to the classroom. If you have questions, please feel free to ask. Raise your hand. I will get them all answered. Take a lot of pictures. Get them in your spreadsheet. Guys, repetition creates recognition. Um, and when you see things enough, they will become easy. Your analysis will happen in a matter of seconds. And by keeping it simple, it's going to make it easier for that to happen. So in the spirit of simplicity, we're going to look at a high probability trend trade. And this trade has 3 rules. That's it. Each one of the rules creates an advantage. And the advantages, momentum, clear path, and an entry area, are the recipe for a trade for my brand new users. And what these advantages do is they put you into the market where the market is most likely to continue. And that is the basis to create your chart reading. These three advantages are going to come to play on only two charts. You will see people with three, four, five charts in here. Two charts is what you need for a high probability trend trade, guys. Two charts are where you're going to gauge those advantages. And your large chart is a slow chart. Your large chart is going to use one single bar, and it's going to define direction, momentum, and areas. It's that broad stroke. It's the overall opinion of the market. It's looking at what the people that move the market are making happen. Your first two rules, the rule of momentum, the advantage of momentum, and the advantage of a clear path, are going to happen on these large charts. We had a great moment yesterday where somebody had this aha moment. If the large chart doesn't say you have momentum, and if the large chart doesn't say that you have a clear path, the small chart is irrelevant. You could keep it minimized and never look at it until the large chart says it's time to look for an entry. But when it is time to look for an entry, we're going to refine that broad stroke of a brush on a small chart. We're going to recognize an area. We're going to trade from that area. That will be your entry for the high probability trend trade. And by doing so, by refining that broad stroke and pulling it down on a smaller, faster chart, it's going to allow you to reduce your risk. It's going to allow you to maximize your profit potential. So I'm going to show you a little example of that refinement process. Um, One bar circled in black on the large chart will define momentum, direction, and areas. All of this one bar happens in 15 to 30 bars on your smaller, faster chart. And it's that refinement process that's going to have you pinpointing your areas for entry. So three rules, two charts. Let's get to work, guys. Rule number one says that we must have strong triggers on our large chart. That the large chart tells us that we have momentum. Your large chart is going to define direction first. It's going to tell you what direction the market is moving. I'm going to tell you right now, this is going to be one of your biggest safeguards as a brand new user. If the background on your large chart is green, you're in an uptrend. And if you're in an uptrend, you should only be looking for rules to be met for high probability trend trades long, trading with the trend. If the background is red, we're in a downtrend, and you should only be looking for rules to be met for high probability trend trade short because we're in a downtrend. This little adherence to sticking to the trend is going to keep you out of a lot of trouble. It's going to keep you from forming opinions about what the market should do, and you can focus heavily on what the market is doing. Rule number one says that we must have strong trigger lines, and strong trigger lines happen when your small triggers, remember this is a large chart, these solid line triggers break above your large triggers, these dashed lines. These two lines create the large, these two lines create the small. When there's separation between the two, when the small break above the large in an uptrend, this separation lets me know that the odds are favorable for the market to continue up. We're going to call this odds favorable momentum, and you're going to hear that in classroom quite a bit. When we have odds favorable momentum on your large chart, when you look back at it, you're going to see these tails, these wicks on that one bar. These tails or wicks are those pullbacks on your smaller, faster chart. These are potential entries for a trend trade. So in the moment, you won't see these tails, but these tails will form with that odds favorable momentum. Next-gen users are able to pinpoint right where that tail is likely to end and head the other direction. So in an uptrend, separation means strength from the point where they separate until they return. This is your advantage. In a downtrend, it's that separation, once again, small below the large, lets you know that the odds are favorable for the market to continue down. Guys, visually, this is rule number one defined. These are your strong trigger lines. If you commit to strong trigger lines, commit to trading with the trend, you've got the advantage of momentum. That first part of the equation, good morning PFI, is taken care of. That first rule has been met, and you now have the advantage of momentum. Momentum moves markets. And when those trigger lines work their way back inside of the large trigger lines, when they no longer have separation, we call this a weakening of the large triggers. And when you weaken the large triggers, anything can happen up or down. It goes from odds favorable to anything can happen. You go from the confidence of a market that's likely to continue to the, what's the word I'm looking for? To the ambiguity of a market that could do anything at all, right? So rule number one says strong trigger lines. Rule number one gives the advantage of momentum, and the advantage of momentum happens. Well, the NASDAQ has been absolutely whipsawing this morning. Let's scroll back. The advantage of momentum happens when the small separate from the large. When the large are wide, they're angled in the direction of the trend. And there's some of those tails showing me potential entries. In a downtrend, smalls below the large are wide. Guys, this happens throughout the day, all day. And then there will be times where trigger lines don't agree. Maybe the trend is up and the triggers are red. And these are times of indecision. These are times when the forces that move the market, the buyers and the sellers, are fighting one another. They're struggling for supremacy. If you commit to the advantage of momentum, what you're going to find is when that market is indecisive, you don't get caught in the middle of it. You don't feel compelled to predict what the market's going to do. You can sit on your hands, go grab a cup of cocoa, and relax, right? Wait. Wait for the advantage of momentum to come back. So, rule number one sets the tone, guys. Rule number one gets everything started. Rule number one gives you the advantage of momentum. Once that momentum is in place, once that rule is true, we're going to make sure that we have a clear path. Rule number two, not trading in determination conditions. Avoiding areas where the market is likely to stop. That's going to give us the advantage of a clear path. In the areas that might stop the market, notice that I say might or may or have the potential, right? Because areas break all day long. If they didn't, we'd be caught in this like Pong game of the market. The areas can be red Fibonacci resistance, blue Fibonacci support, yellow one-to-ones. The areas can be a magenta divergence high or a cyan divergence low. All of these areas have the potential to stop the market, to reverse the market, to create an untradeable bounce. So we're going to go through a simple two-part equation so that you guys can identify these areas right in the moment. And to identify an area that may stop the market, to identify an area that qualifies as a termination condition, it's a two-part process. I would encourage you newer users, write this down on a piece of paper because these words are probably the most important words to being consistent on termination conditions. The first thing that happens is price reaches an area. Write that down. These dynamic Renko bars reach an area. In this downtrend, with this momentum, these red bars come all the way down to Fibonacci support. Price must reach an area. Once price reaches an area, all you have to do is ask yourself, where are my triggers? Where are my T3 trigger lines? If price reaches support and the trigger lines remain above that area of support is behaving as a termination condition. This is an area that may stop the market, that may create an untradeable bounce. It also might break. When you reach it and none of the triggers get through there, guys, this is a termination condition. This is where Nexgen users will sit on their hands and wait for the advantage of a clear path. That advantage of a clear path happens when both your small and your large triggers get to the other side of the area that just behaved as a termination condition. Up here, price reaches support and the trigger lines remain above. This is your cue to sit on your hands to wait to see how the market's going to react to it. When both your small and your large triggers get to the other side, now the area is considered broken. Now that path is clear. So if you allow it to be very simple in the beginning, there's only two options for brand new users. Price reaches an area, no triggers through, it's not broken, there is no clear path, rule number two hasn't been met. Both the small and the large area, or small and large triggers, break through the area on the large chart. Now the area is considered broken. Now the path is clear. Notice that it's that odds favorable momentum that gets through that area of resistance that gets my triggers to the other side. And there's one of those potential entries, one of those tails for that best of the best, getting you where you need to be. The idea that simplicity is a great approach, guys. Let it be broken or not broken in the beginning. Make sure that you have the advantage of a clear path. And every time price reaches an area, all I want you to do is ask yourself, where are my trigger lines? The price bars touch the area. Where are my trigger lines? Here, all my trigger lines are below. I'm in an uptrend. Everything says the market's going up, but I've reached a spot that may create a bounce or reverse the market. So no more long trades. Price pulls all the way back down to support and all the trigger lines remain above. No short trades. 90% of what you do during the day is waiting for the advantages. Price pulls up to resistance again. It pulls up to that divergence high. All I have to do is ask myself, where are the trigger lines? And if those trigger lines remain below, I've reached a termination condition. I can't go long into that position because this is an area that may reverse the market. Sure enough, this area does reverse the market. And I'm going to give you a definition right now because you're going to hear this and see this all the time. A termination condition that creates a full reversal is what we're going to call a strong top or a strong bottom. If price reaches resistance and it reverses the market, that's a strong top. And if price reaches support and it reverses the market, that's a strong bottom. A strong top or bottom is the precursor for the highest probability trend trade that you can take. When a trend trade sets up after a strong top or a bottom, this is the trade that typically wins 70 to 80% of the time. This is your best of the best. This is your highest chance of success as a new user, and that success creates confidence. You'll see it from a top, and then you'll also see it from a bottom. Even with odds favorable momentum, price reaches this yellow one-to-ones. These yellow one-to-ones may create a bounce. It may reverse the market. If they do, they're a strong bottom. If they break, all of my trigger lines will get to the other side. So I take a second and I wait. I'm patient. I'm waiting for the advantage of a clear path once again. This termination creates a full reversal. Your large triggers go from red to green. Your small triggers get above the large triggers, painting that background green. And when both the small and the large triggers get above this sticky little area of resistance, now I have a clear path to the upside. Now I have small triggers that are in fact outside of the large, and there's one of those potential entries. There's that highest probability trend trade entry, and we're going to teach you how to recognize that entry so that you can get into the market where it's most likely to continue. Give me a Y in the room, newer users, if you're okay with this equation that we're talking about. Price reaches an area, and if none of the trigger lines break through, let's go to something that's not as spastic as the NASDAQ. Uh-oh, there's my untitled workspace. Let me close that out. I'm going to go to crude oil real quick. It tends to behave. But here's a prime example right on crude oil. Price reaches Fibonacci resistance and absolutely no trigger lines break through. I'm not going through. I'm not taking long trades because this is an area that may reverse the market. Price reaches Fibonacci support. My small and large haven't made it through the area. 90% of what I do is sitting on my hands waiting for advantages, right? Because when they present themselves, then it's time to look for a trade. You're going to see it at support, resistance all day long, and you're going to see these fibs hold, reverse, or break. All you have to do is be patient enough to wait for your indicators to give you the information. There's that odds favorable momentum right between fibs, and you'll notice that that market continued down all the way to Fibonacci support. Pretty cool, right? The advantage of momentum, the advantage of a clear path, and sure enough, it finishes the move down to Fibonacci support. Termination conditions are designed to keep you guys safe. Termination conditions are designed to keep you from trading into these areas that may stop the market. And what you're going to find, Snorri, it depends on the market that we're looking at. I just scrolled through three different markets. I looked at the S&P, the Nasdaq, and crude oil. So the first thing we would do is make sure that we're looking at the same market. On crude, can you show me a picture? My charts are NinjaTrader 7, not NinjaTrader 8, and I change my charts a lot for education processes. I do a lot where I take things off of the chart, where I add things to the chart. So sometimes mine aren't going to look exactly like yours, but what you will find is that the patterns are going to happen on mine and yours. I always encourage people to trade their charts. You're on NinjaTrader 8, yes? Yep. And Snorri, another thing is I go through a process every morning where I clean out my cache, I clean out my tick, I start with fresh data every day, and I'm looking for the how-to there. But I'll go through and I'll clean out um, every day. So both triggers broke through, haven't broken the second. Absolutely. You've got a fib coming over from your 5-1 that I don't. You've got some great information there. I like it. And I'm in a little different spot on yours as well. So what happens sometimes, Snorri, is um, I'll show you exactly what I do every morning because I don't want new users worried about differences. I may be a different number of days back. I might be, we may be in a different time frame. I didn't look at your timestamp. Are you on Eastern time frame on your charts? You appear to be. Fantastic. Every morning I go to NinjaTrader 8 and I go to my database file and I clean out my cache and my tick just like this. And what this does is when I open up NinjaTrader 8, it gives me fresh data. So if there's anything corrupt, it's gone. I also go to my temporary folder and I get rid of everything in here, starting fresh for the day. And then I also go to my workspaces and I get rid of my recovery folder. And this is part of the process every morning, making sure that I'm the best of the best. And then Ron says, here's a picture of his. And Ron doesn't have the educational ones. And Ron's looks very much like, well, yours look like mine. And that's NinjaTrader 7. So his look like exactly like mine on NinjaTrader 7. NinjaTrader 8 has one tick of data in there that looks like it gave you an extra fib. I always encourage people, trade your charts, right? Trade your charts. But right now, let's focus on the lessons. Let's focus on odds favorable momentum. Let's focus on termination conditions. No, you're fine. Stop saying sorry. And guys, I see that somebody sent me a message on Discord. If you send me a message during class on Discord, I won't see it till after class. Cool. I just don't want anyone to ever feel ignored. I don't want anyone to ever feel ignored if I don't get right to your thing. GWC, get with Jason and Tech and have him make sure that everything is exactly where it needs to be. John Novak said that he may have left something unchecked in one of his templates that was creating an issue. Jason will be able to help you with that. So guys, terminations can stop the market. Terminations can reverse the market. Terminations can create bounces too big to trade. When a termination condition is present, you don't have the advantage of a clear path. When price or when triggers are beyond the area, you have a clear path. And we're just going to keep it simple in the beginning, guys. Rules 1 and 2 on the large chart, looking for a clear path, looking for momentum. And when you have it, we're going to refine. We're going to go to the small chart and we're going to look for an entry. We're going to define the point where the market is likely to continue. Bum, bum, bum. And again, right here in the manual, finding your entry, guys. When the rules are met, on your large chart, when you have momentum, when you have that clear path, this is going to be the look on your smaller, faster chart. Your triggers should be strong. Strong triggers are universal to any chart you're looking at, guys. Momentum is defined when the smalls are outside of the large. Um, it's really that simple. Whether you're looking at a 5-1, an 8-2, a 21-3, a 13-2, a 34-5, a 55-8, doesn't matter. Strong triggers are strong triggers, and this is really the best look. The next look that you're looking for on that small chart is you want to make sure that you have favorable large triggers. And what favorable large triggers mean, and then Dwight, here's your definition for what's what. Favorable large triggers mean that your large triggers, those smooth large triggers that are native to the 5-1 chart, that are created from the price and the motion on the 5-1 chart, should be coupled with your synthetic triggers. And your synthetic triggers are brought over. They're just transposed. They're synthetically added to your small chart. These are the large triggers on your 13-2 chart, on your large chart. And what we find is that when these two line up, one on top of the other, when they're wide and angled in the direction of the trend, it creates an advantage. And trading is all about advantages. So favorable large triggers are when the triggers are wide, they're in the direction of the trend, and both the large and the synthetic are one on top of the other, overlapping. Because the tighter they are with one another, the smaller your window of opportunity, the smaller that point of entry becomes, which means that there's less risk for you on a trade. So rule number 3, the advantage of getting into the market at the point where it's most likely to continue happens on the small chart. And rule number 3 says that you're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. The large chart is the large crowd. The large chart defines the areas, it defines direction, it defines momentum. It tells you that it's time to look for a trade because of what the bigger crowd is doing. There's always a small crowd that wants to fight the system, that wants to go against that momentum or that trend. Don't be a small crowd guy. But without them, we wouldn't get that great entry because they're going to give us a push, a small retracement that's counter to the underlying trend. And rule number 3 says, Nexgen users, you're going to use a limit order, meaning you're going to wait for the market to come to you, and you're going to buy or sell a pullback, that small retracement in price, and that pullback needs to happen at areas inside of favorable large triggers. So there's a couple pieces to it. Everything says up, the triggers are favorable. You can see your areas. Fibs, mid-bands, or yellow 1-to-1s. These are the areas. These are your bounce point for the high probability trend trade. But we have to wait for the small crowd to do their part. And the small crowd is going to give us a push. And that push begins with a reversal bar. This is the process for finding the area where the market is most likely to continue. At the time of the reversal bar, I'm going to look for the areas that fall within those favorable large triggers. If it's a long trade, my window of opportunity, the point where the market is most likely to continue, extends from the highest point of support to the lowest point of support inside of favorable large triggers. For a short trade, it's going to be from the lowest point of resistance to the highest point of resistance. It's just a window. It's a potential bounce point. And at the time of the reversal bar, you're going to go through the process of identifying the window. And I'm going to show you exactly how I do it. And this tends to be the most straightforward way for new users. When the reversal bar prints, I want you to take a drawing tool and just go, where are my favorable large triggers? Where's the top of those triggers? Where's the bottom of those triggers? Because I know that my window of opportunity lies within. For a long trade, your window of opportunity extends from that highest point of support to the lowest point of support, from that green midband to those yellow 1-to-1s. This becomes the area where the market is most likely to bounce. This is the area where we're going to look for an entry. Because of the momentum on the large chart, because of the clear path on the large chart, you're going to activate a limit order right at the top of that window, right at the highest point of support inside of favorable large triggers. And if it comes back and it reaches you, you're in a long position, guys. You're in a long position because, not because you hoped it would go up, not because you wanted it or wished it to go up, because you have the advantage of momentum, you have the advantage of a clear path, and you have the advantage of an entry area. And that's the recipe for a trade. The market's going to pull down and it's going to reach the top, hopefully. That gets us into the trade. But because we created a window, because it's an area where the market may bounce, I want everybody to be prepared that it may go to the bottom of that window, that the market may push lower, right? It may go to that lowest point of support. And guys, here's the kicker that a lot of new users absolutely hate, is that it may go beyond that window. It may go and we may lose that advantage. In any trade, I type this out every morning because losers don't mean failure, guys. Any trade that wins 70 to 80% of the time is obligated to lose 20 to 30% of the time. And I want you to learn to consider this a cost of doing business. Just because a trade loses doesn't mean that it was a bad trade. Just because a trade loses doesn't mean that you did something wrong. And this is why that chart annotation is key. This is why writing your rules on your chart is key. Because I know without question that if I have momentum, a clear path, and an entry area, it's a trade that typically wins 70 to 80% of the time. So I know that if I take an entry at the top of that window, it's a trade that typically wins 70 to 80% of the time. But I also know, and I'm a realist, that 20 to 30% of the time it may push beyond that window and it might just keep going down for days. We don't know. So Nexgen users, you're going to manage your risk and you're going to put a stop right here outside of that window of opportunity. You're going to be like the catcher waiting. And if this market for some reason pushes beyond that window, you're going to manage your risk with a stop. You're going to take that loser and you're going to understand that it's a cost of doing business. Every advantage was in place. This is just part of the 20 to 30. We're going to allow the market to be wrong with dignity. But this is a trade that I want you to build trust in through repetition because this is a trade that when you follow the rules, when those advantages are present, typically wins 70 to 80% of the time. This is your foundation trade. This is the trade that's going to teach you to recognize advantages, that's going to teach you to read your chart, that's going to bring you confidence through the memory of success. And this is a trade that you can study, and this is how you're going to study it over the weekend. If your large chart, scrolling back historically, has odds favorable momentum, if your large chart has no termination conditions, you'll be able to circle a tail. It's already happened. This is in the future, right? Or in the past. If you circle that tail and it lines up with an area of support inside of favorable large triggers for a long, you know that the rules have been met for your high probability trend trade. This is your look. This is the one that you're going to commit to memory. This is your long trade. That's how you're going to study it, and I want you to study it. I want you to prove me wrong. I want you to go back historically, and I want you to find those odds favorable momentum moments, those clear path moments, and circle the tail, and see if it pulls back to an area inside of favorable large triggers. This one didn't. This one exceeded the areas that were outside of the triggers, and this wasn't rule number 3 met. So we'll scroll back and we'll take a look. And this is wee hours of the morning. There's odds favorable momentum, no termination conditions. This one pulls back to the large triggers, but once again, there wasn't an area inside. But we're starting to see how those bounces happen. You're starting to recognize how those advantages come into play. This was in the middle of the night, and this happens to be into a termination condition. But let's just look for the pattern, right? Straight back to support inside of favorable large triggers. If you go up a little bit, you see it again. Over and over. So this is the pattern that you can scroll back. You can start to circle these tails. And you can identify when the market is giving advantages. I'll scroll back to this one. Guys, give me a Y in the room if you're with me. You can scroll back at least 10 days on every chart that you own. You can scroll back and circle these tails. Look at these advantages. See what happens when they're present and see how the market moves. This is just your study process. This is how you're going to start to recognize. And here it is, crude oil right in the moment. There's a termination that creates a full reversal. That full reversal creates odds favorable momentum. That odds favorable momentum gives me a clear path. And guys, there's your entry right at the area of support inside of favorable large triggers. Now, what I'm hoping is that some of you are going to show me a picture of this entry because that's your best of the best, guys. That's the one that's going to get you where you want to be. That's the one that's going to teach you to read your charts. That's the one that's going to have you identifying advantages. And Daryl says, you know what, Mark? I believe in the system. I'm going to get in right here and I'm going to get paid up here. Daryl, beautiful trade. Thank you for posting that right at the opportune time. How does Daryl know how to do this? Because Daryl follows a plan. Because Daryl took the time. I'm going to put you on the spot, Daryl. I'm going to praise you. Daryl has a plan for entry, and his plan for entry revolves around momentum, no termination conditions in an area inside of those triggers. And he practiced it, and he studied it, and he posted pictures in this room, and he asked questions about it until it became easy. And now it looks pretty easy. Guys, I'm going to give you this checklist right now. Print it out, put it on your desk. Every time you take a trade, make sure that these advantages are in place. Every time you take a picture, write these rules on your chart. Reinforce that you're a rules-based trader, and there's only two options for entry. Either your rules are met or they're not. Because what you're going to find is that this commitment to simplicity initially is going to open up doors for you, and you're going to begin to recognize patterns that you never thought possible. I'm going to give you the exact same checklist, but I stole pictures from the resource materials. When a termination creates a full reversal, well, that's a good top or bottom. That's the precursor for the highest probability trend trade. Here's your odds favorable momentum, exactly what it looks like. And remember those anything can happen triggers? Here's the picture reminding you that anything can happen up or down. Here's your termination condition recipe visually. And then guys, probably the best picture for new users. This is how you're going to define your window of opportunity. And I'm going to kind of pull this one out of there and I'm going to give it to you guys in the room. And I want you to study this because this is the recipe for finding your best of the best entry. Waiting for the pullback, identifying the area inside of favorable large triggers, and understanding that that's the point where it's most likely to continue. Guys, I'm giving you this checklist so that you can study it briefly each morning and burn these images into your mind. So now we have one for your desktop and then one for your computer desktop so that you can have the ability to police yourself each and every time you take a trade so that you can practice the correct rules. And you will break rules and you will make mistakes. And I want you to post those mistakes in the room so that we can talk about them so that we can fix them. And then finally, I'm going to give you one more thing this morning. I'm going to give you what's called the KISS trading plan. The Keep It Simple Sunshine Plan. Thank you, Bobby T, for the sunshine reference. Disclaimer, big bold neon disclaimer. This plan is a stepping stone, guys, in your learning journey. It's designed to optimize your chances of success with a high probability trend trade or a 50-50 trade, which is actually a medium probability trade, but I'm adding this to the plan so that you have two options as you watch the market. Through simulation, study, class feedback, and continuous practice, you'll be empowered to create a plan tailored to your personal goals based on your experience reading the indicators. I'm going to highlight this part right here, guys. Through simulation, you have to practice. Gary, have a great trip. Through study, I need you to study these looks so they become easy. Through class feedback, posting those pictures. This is what I see, this is what I'm doing. And through continuous practice, guys, repetition creates recognition. You'll be empowered to craft a plan tailored to your own personal goals using the experience that you create. Until you have the repetitions to create your own plan, I'm giving you the simplest, best approach to learning to trade these markets with Nexgen software. So we call this the simple plan for consistency. Notice that in big bold letters and underline it says never fight the large chart direction or triggers. Never fight the trend. Never fight the momentum, guys. And this is going to keep you out of like 70% of the losers that most new users take. Defining your entry. Great entries create manageable trades, guys. Great entries are the basis for a solid trading plan, a methodical, mechanical approach to entering the market. Here's the rules for you to enter the market. Stick to them. Understand the looks. Snorri, don't waste your energy being annoyed. It's not going to do any good for you. So do me a favor, Snorri. You're on Nexgen 8. You've got this. Guys, do I have any NinjaTrader 8 users that can show me a picture of their crude oil charts? Jose, I know that you trade crude. Can somebody do that for me? Give me a large chart, small chart crude. Let me know what yours looks like on 8. Because I know that it's frustrating sometimes if your charts don't match my charts or your charts don't match someone else's charts. But Snorri, so what we're finding right now is that we're 3 for 3 on consistency with me, with Jeremy, thank you, Jeremy, and with Ron. Um, and I know that nobody wants to do this in the middle of the trading day. Nobody wants to take a moment and pause during the trading day. But I want you to do me a favor, Snorri. I want you to close out your workspace. Dun, 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 where is it at? I just want you to close out your workspace for me. And I want you to disconnect from NinjaTrader 8. And let me find it in my lineup here real quick. And I want you to do me a favor. We're going to walk through this real quick to help you out. Um, almost there. And Snorri, what I want you to do when you're disconnected from your NinjaTrader data, I want you to repair and reset your database. I want to get in and let's get that fresh, awesome to the moment. Because sometimes if you don't delete your cache and tick, sometimes if you leave NinjaTrader running all night, it creates a different scenario. That midnight can create just one little tick of corrupt data, which can change a view. And my brother and I compare charts in the morning, and one of us typically has to do this. So this is going to walk you through it on NinjaTrader 8. You're just going to go to Tools with it disconnected. Are you with me, Snorri? Go to Tools, Database Manage. Awesome. Reset and repair. And then open those charts back up. And let's see if that gets you where you need to be. Let's see if that gets you so that you're on the same page as us. Because sometimes data corrupts, right? So I just want to make sure that you're cool with that. And then I always encourage, if you're still having challenges, if it doesn't feel right, if it seems a little off, sometimes there's something going on that I can't tell from where I'm sitting. And Jason in tech support can fix anything. The only things he's incapable of fixing are going to be actually things that aren't broken. But I think that that reset, repair, 9 out of 10 times that gets people squared away. And I see Cam's looking too. So Cam's looking out for you as well. I got a team that's going to make sure that you're taken care of and happy. Oh, is he on Iceland time? I didn't see that. No, we look to be consistent. He looks like he's on Eastern. And sometimes the number of days is the culprit. No, you're okay, Cam. That's smart. And I appreciate you looking out for your guys. That's what you do. Snorri, we're going to get you, I promise. If one thing, we're stubborn, right? We are stubborn and we're not going to let you worry. So try the reset. Yeah. If you're on Eastern, you're great. But yeah, but if your computer is on Iceland time, then your computer's midnight is different than NextGen's computer midnight. Like if you look at I'm at 9:58 a.m. It's only 6:58 where I'm sitting, and which is odd that you can get the platform to be different than the actual time. So it may be creating a little confusion between the two. You may want to jump in with Jason and have him take a look, and he'll get you squared away 100%. But try that database reset, see if that works. Sorry for the digression, everybody, but these things are important. We're going to take care of them. So, guys, here's your entry for the highest probability trend trade. There's a couple pictures of the entry there so that you know what it looks like. Defining your entry is your first 20 days, guys. Defining your entry, getting in at the best spot. This is going to create manageable trades. This is going to put you in a position where good morning, Sydney, where you're giving yourself the highest chance of success every time you take a trade. Every great entry creates a management opportunity, and that's the next piece of the puzzle. You're going to figure out your entries, and then you're going to learn how to manage it. So, most people, this very straightforward mechanical approach is the best approach as you're learning to read your indicators. So, we've created an if-then scenario, guys. And everything on this management plan, on this simple plan for success and consistency, revolves around your best entry, getting in at the area where the market is likely to continue. When you get in at the area, your initial stop is outside that window of opportunity. Think about it where the market should not go. And at this point in your trade, there's nothing to do. It's either going to be a loser, you've got your protective stop in place, you've managed your risk, it's a cost of doing business, normal part of a positive equity curve, or the market's going to give you a reversal bar in the direction of the trade, go in the direction of the momentum, the clear path. If the market gives you a reversal bar, you're going to move your stop a couple ticks above that reversal bar because it's already telling you we're doing it. Here we go. The market's doing exactly what we anticipated it would do based on the patterns, based on the advantages. And at this point, there's nothing for you to do. Don't insert your hope or your wishes or your emotion. Just let it play out. You're either going to get stopped for a small loss or it's going to go to your first target. And your first target, based on this simple plan, is only $100, which doesn't feel like a lot of money. But as a brand new user, I can tell you right now, when you win $100, when you hear target hit, when that money goes into your simulated account, it feels great. It feels amazing. There's a dopamine kick that comes with it. Serotonin is rushing. They can't take that money from you. It's yours, and you're going to move your stop to break even. And this break even stop is going to get hit a lot for a new user. You're going to have a lot of $100 trades in the beginning as you focus on your entries and keep it mechanical. But what that $100 or that break even stop, that zero risk on the trade does is it makes it easier for you to trust the large chart. It makes it easier for you to trust the momentum, to trust the direction, to trust all of the advantages that get you into the trade. And you're not going to move your stop again until either it gets hit or your second target is reached. And that $300 target, guys, is a pretty simple approach to managing trades initially. And you're going to adjust your management plan as you learn to grow, as you learn to read your indicators. You're going to start holding for larger moves. You're going to start recognizing when that market is most likely to continue in the direction of the trend. And this is your plan for simplicity, guys. This is your first part. And I'm going to give you this plan right here. Use it, embrace the idea that you shouldn't be looking for everything, you should be looking for the best, guys. And this is how we start off every new user. Embrace the idea that this is just a stepping stone. It's only the beginning to get you where you want to be. And then for you guys that are moving on a little bit, that are trying to make new trades, that are trying to look into different scenarios, having a plan is imperative. Knowing what it is that you're looking for is imperative. Having a solid set of rules that give you an entry, that give you an exit, guys, this is huge. Removing the emotion is such a big part of trading. So this template's designed to help you create a plan outside of the simple plan, guys. And it has the same thing. You're defining your entry. You have to have the rules, and they have to be testable. So I want you to take 10 pictures of longs, 10 pictures of shorts. I really want you to take 100 pictures of longs, 100 pictures of shorts. And if you're going to develop a new plan, if you're going to take the next trade, whether it's a momentum trade or an HVA or an edge trade or a counter trend trade, I don't care what kind of trade it is. It needs to be definable, it needs to be repeatable, and you have to have enough samples to guarantee yourself that it's a pattern that wins more than it loses. This is where newer users fall short. They'll see somebody in the room take a momentum trade. They'll see somebody in the room take an HVA trade, and they'll say, well, I don't have rules for that, but I'm going to take it anyway, and they're going to make mistakes, and they're not going to know why. So it's imperative that you have a plan for each and every trade that you take. And guys, this is our first hour. Welcome to Nexgen. It's great to have you. I do this every hour, every day that I'm in here. The first hour is dedicated to rules. The first hour is dedicated to advantages. And then when I go back in the second hour and I start looking at your charts, I'm going to revolve everything that I see. And this is important because this is part of the education process, because it is an educational room. Everything that I see, I'm going to relate back to these advantages. So if you're taking a trade that falls outside of the high probability trend trade, I'm still going to discuss the advantages. And it doesn't mean that your trade is right, and it doesn't mean that your trade is wrong. It just means that it's different. And Snorri, boom, reset, did it. Nice job. And then is it an entry? I'm telling you, we can fix anything, Snorri. Watch this. So here's the next step. Are you ready? I'm going to show you exactly how to determine whether or not that was a high probability trend trade entry. Snorri, will you do it with me with the rules? Are we coming from a good top or bottom? Is there a termination that creates that reversal? Absolutely. No triggers through support, right? Where's my checklist? Let me pull up my checklist. I'm going to show you how you can do this. Let me make this a little bit smaller. If you have Snagit, guys, you can do this with Snagit. Let me just drop this down smaller. Ooh, that's maybe too small. Dun, dun, dun. Let me take a picture of my picture. And here's our trend trade checklist. And I'm going to put this trend trade checklist on your chart. Make it a little bit bigger. Is the market coming from a good top or bottom? The answer is yes. So the first rule has been met. So far, so good, right? You notice that we're in an uptrend. The market's coming from a good top or bottom, a termination that creates a full reversal. There's my first check. Whoops, I moved it so my check moved. There's my first check. There's my first yes. And that's exactly what we're looking for, is a yes. Do I have odds favorable momentum? Small's above the large are wide, they're angled in the direction of the trend. Absolutely. Do I have no termination conditions? On this bar, it hasn't reached the area yet. We'll say yes. And then I feel like, do I have an area inside of favorable large triggers? And Snorri, this is where your ability to read charts might change your approach for an entry. You might say this midband is 4 ticks outside of favorable large triggers. You might say that they're strong, everything's up, the termination is there, the momentum is there, the term, like everything is perfect except this little moment right here. This midband, just a shade outside. And Snorri, this is where your chart reading will say, I'm taking that trade because I have way more advantages than I have disadvantages. 3 ticks outside of the trigger lines isn't enough to keep me out of this trade. Does that make sense? But if I put it up against that high probability trend trade checklist, this one doesn't quite make it. And this one is right inside of those large triggers. So I'm always going to resort back to basics, right? I'm always going to resort back to simple. And then you're going to find, and you're going to see it over and over in this classroom, that there's a million different ways to take these advantages and turn them into trades. And sometimes, and it comes with repetition. And Snorri, one of the things I encourage people to do, and this is great for the weekend, is on my personal spreadsheet, we have the client trades pictures. I'm going to put this in the room. And what you'll do is if you start clicking through these, what you'll find is that there's a tremendous amount of similarities. Most of them revolve around odds favorable momentum and a clear path, and you'll see different style entries based on those two advantages. So go through and click through these, right? And take a look at them. And it's just going to increase that repetition. It's going to get you to where you're seeing things faster. And ultimately, that may be a trade that you take, right? And this may be a trade that you take where the smalls break through, but the large haven't yet. And it pulls back to support inside of favorable large triggers. And you might say, we didn't quite reach that fib. With these smalls through, with these large coming up, coming from a termination condition, I'm pretty cool taking this shot right up to Fibonacci resistance. And you're going to see these patterns every day, and you're going to see these patterns on every market, and you're going to be able to make intelligent choices, and you're going to create a plan that works for you. You're going to create a plan that gives you advantages, but until you get that repetition, I'm giving you guys the simple approach to trading these markets, the simple approach to having advantages, how to manage it, how to keep it pragmatic and methodical until your chart reading comes into play to the point to where you can do this on your own and create your own plan. So, guys, that's it. That's the first hour. I'm going to take a minute and then we're going to get into the second hour. In the second hour, I'm going to look at all the charts that you posted. I'm going to try to answer all of the questions that you ask. Yes, I do, Joel. And it is fun. And it should be fun, guys. Education should be fun. Education should be a great time. Education, you should have this empowered feeling. Every time something clicks, I want you to celebrate that clicking. Every time that you follow a rule, I want you to celebrate following the rule. We are so quick to beat the hell out of ourselves for making mistakes. I want you to take that same energy and turn it into celebration. Celebratory. I just identified odds favorable momentum. I'm amazing. You probably want to be my friend. I just identified weak trigger lines. Have you met me? I'm kind of a big deal, right? Celebrate it, guys, because I'm going to celebrate it. You may as well celebrate with me. I'll be back in about 5 minutes. We'll get into that second hour. Be right back. PFI. So you don't have to buy a rhythmic plan. So what's going to happen is if you go to Apex and you have that 80% off, you're going to go through and you are going to sign up. And that's really the first step is there's Apex. You're going to go to Apex and you're going to sign up and you're going to pick whichever one you want to do. A lot of people do the 50,000. It's a good one, and at 80%, it's going to be like $34 a month, I think. So what you do is you put in your coupon code, and then you don't have to buy the Rhythmic plan. What they're going to do is they're going to send you instructions. It's going to have you download Rhythmic, and Rhythmic is their data. And let me move this over a little bit. And what's going to happen is you're going to download Rhythmic, and you're going to put your credentials in, and it's going to give you one of these, Rhythmic Trader Pro. And then you're going to put those credentials into NinjaTrader. They're going to give you a license for NinjaTrader, and they're going to give you the Rhythmic credentials so that you can get live data, so it hooks up to their server so that they know what you're doing. Um, and you're going to download that Rhythmic, and that's going to be a separate running thing, and that's going to allow you to close trades and stuff like that and monitor your progress outside of NinjaTrader 8. But they send you everything that you need. They send you everything that you need to set it up. They send you all of the credentials that you need. They give you your license. They do all that stuff to get you where you need to be. And they've also got help on there. And then I think on the main Discord channel, if I'm not mistaken, John's got a link that covers most of the questions for Apex. What are the options? Show me a picture of the options. And maybe I can help you with that. Or that link isn't going to end in the next 18 minutes. Take a second. No, it's okay. Do this because I don't work for Apex. Go to the Apex funding info on Discord. I just put the link there. And dollars to donuts, 90% of your answers are going to be answered. So I'm not sure about. I can tell you that I use Rhythmic. So hopefully that helps. But we could probably do this all day because you're going to get a million questions one after the other. And a little bit of study on that might work. So guys, I'm going to scroll up to the top. This is what it looks like for me to get to your pictures. So if I get to your pictures, I'm going to click on them. We're going to look at them. We're going to talk about them. And I'm going to relate everything that you see and do back to those three advantages. Whether you're taking a high probability trend trade or not, I'm going to relate everything back to those advantages. So let's get to it. And Gawis, I wanted to click on yours. I know it was yesterday, but I want to click on it because you were talking about the trade and your heart was pounding, and that's awesome, right? I don't have delayed market data. It's live. Everybody should be live. Gawis, are you with me? Let's talk about your chart. I love it. Trend is up, right? Beautiful. Easy to identify. Smalls have broken above the large. Once again, that becomes easy to identify. So you're looking at momentum and you're looking at this. And then you got just a little bit ahead of yourself, Gawis, is you looked for an entry over here, but you forgot one thing. You forgot to look for those termination conditions, that area of resistance that no trigger lines have gone through. Do you see it now? Maybe without the excitement of the trade going on? Price reached Fibonacci resistance, and none of the trigger lines have broken through it yet. And that becomes that problematic area, that area that may create a bounce. I love everything about this trade, and I think that not trading into these big red fibs with no triggers through, it might break, but it's also just as likely, if not more, to create a bounce that knocks you out of this position. Does that make sense? And then I want to, and this is for everybody, and Gawis, this is very, you're very welcome. This is pretty common. You said that you were waiting for that resistance to turn blue. I want to remind you guys that there's absolutely nothing in your rules that talks about Fibonacci color. There's nothing that talks about if it changes to blue, it supports the trade, right? Because it's not the color of the fib that's creating advantages or disadvantages. It's the trigger line relation, and that's why I spend so much time on trigger lines. These fibs could be any color at all. This fib could be yellow, right? And if price reaches a yellow fib and all the triggers are below, it may reverse the market. But we use the trigger lines to determine. So this fib could be yellow, and it's a termination. So don't get caught up on going, oh my gosh, it just turned blue, I have to go long. Use that large chart. Let that large chart lead the way in those terminations. Great pictures, and I didn't want to miss that one. I know you put it in yesterday afternoon. But as new as you are, I want to make sure that you're getting your feedback. So great job. Scrolling down. All right, Safia. Safia, termination creates a full reversal with odds favorable momentum. Your first trade you said was a high probability trend trade. That was at 12:20. That was this one right here. I love it. Everything down, you pull back to resistance right inside of those triggers. Textbook, you get out. And guys, you don't think I see it, but I do. Why'd you get out of the first short? Was that a target? I hope so. And then you take a momentum style when everything breaks, but at 31, 30, 50, Safia, you don't have momentum. That's okay. Do you see it? You're taking momentum trades without momentum. I feel obligated to post that or to point that out. This is momentum, right? This is momentum. This is weak triggers. This is weak triggers. They're all pointing down, and it is clearing the area. But maybe at 30, 50, you're right into mid bands or right into one-to-ones with weak triggers. So you're relying on momentum that isn't there. I hope that makes sense. Hey guys, I really want you to remember that anytime I point out a problem on your chart, it's not to knock you down. It's not to make you feel bad. It's to remind you that consistency pays dividends, right? Ron, playing on sim, we know that this is simulator with Ron because Ron is fighting the trend and Ron is fighting the direction and Ron is taking this immediate momentum off of a termination condition. And it's a beautiful trade. It's a chart read. Financial suicide for new users, right? He's putting a lot of faith that this momentum doesn't push the market down. He's got a lot of faith that this red background doesn't stop it. And let me show you what he sees from a chart reading. Yeah, guys, don't try this at home. As scary as it is, I can get into Ron's mind. And let me show you what he noticed. When price accelerates away from large triggers, guys, when it really flies away from large triggers and those large triggers don't follow and they're more than a full bar away, price tends to snap back and hit those triggers. It's never guaranteed, but it's a pattern that you'll recognize. And this is called the gap theory. It's like a slingshot. It pulls so far away that it snaps back. It kind of corrects. What Ron did is Ron says, I'm expecting a correction, but I'm not going to fight all this down nonsense. But if my small triggers, my immediate momentum, rocks it up, I'll try and catch that correction. And that's exactly what he did. It's a beautiful chart read that creates enough advantages for him to feel comfortable taking the trade. It is definitely not a brand new user trade. That is a trade that I watch new users get run over on time and time again. And notice that he said that he did it on simulator. All right, Lenny. Are you with me, Lenny? Are you in here? Cool. So Lenny, and this is for everybody really. I'm going to give you the keys to the kingdom right now for moving forward. All right, you ready? And you're going to love this. Exactly, Snorri, 100%. 100%. So Lenny, the first thing we decide on is the trend, right? And the trend is going up, so you were looking the right direction. And I love that. Trading with the trend, that's solid. That's going to create a great platform. I want to look at your trigger lines, though, when you took this trade. And then there's quite a few things in play here. You're gonna love this. But so these large triggers aren't wide and angled in the direction of the trend, right? They're only just now beginning to consider turning. Would you agree? And this is where I'm going to relate everything back to advantages. So Lenny, this is your best of the best look. And this is for everybody, not just Lenny. I'm saying Lenny's name because it's his picture. This is your momentum look, right? This is the one that says the market's likely to push in the direction of the trend, to continue in the direction of the trend. This is, well, it might happen, but my triggers are flat. And you see, you can even recognize that flat trigger look over here as well. So it's not really the best momentum. But Lenny, this is the biggest one for me. Do you see how price reached yellow 1-to-1s? Look at where your small triggers are. They're still below the area. So this in itself is a termination condition. Do you see it? And sometimes in the heat of the moment, guys, we don't recognize it. We're all amped up on adrenaline and we're ready to take a trade. So the termination condition is very real right there. That's a place that could create a bounce. And then let me go to the other side, and this is the one that we just talked about with Ron, is if price hits an area and these large triggers remain a full bar away, see how they're below that reversal bar marker? A lot of great lessons in this picture. But see how those large triggers are all the way below that reversal bar marker? So there's room for a full bar to come back and hit those triggers. This creates a problem as well. This is really confirming that you're directly into an area that may stop the market. Does that make sense? Because your head's in the right place. It really is. Uptrend, small triggers are strong, everything's up. And then notice that your area, your triggers are down here. And your area is way up there, right? Which means that we're not embracing rule number 3. We're not embracing the idea that your best entries come from areas inside of favorable large triggers. Strong, wide, angled in the direction of the trend, and we're looking for those bounce points within. So there were some problems on this one, and that's okay. I love these problems. But Lenny, let me tell you how you're going to fix your chart reading. Are you ready? I want you to get ready because this is mind-blowing stuff, guys. This is next level. Keys to the kingdom. Lenny, write your rules on the chart. Don't tell me that it was a long trade, right? I can see that it was a long trade. Tell me why you took that long trade, because what you're going to find is that if you force yourself into the practice, I believe you, Dwight. I promise I'll look at it. I look at everybody's pictures, but I do them in order to try to be fair to everybody. So, Lenny, if you force yourself to write these rules on the chart, what it does is it teaches you to start embracing the recognition, the looks that go with the rules. And then when you start associating this is my odds favorable and you're identifying those termination conditions, it systematically reduces these errors. Does that make sense, everybody? My biggest problem as a brand new user was that I traded into termination conditions, Lenny. I did exactly what you did here, is I traded into areas that had the potential to stop to create bounces. And I literally had to go through this process, and I shared it with somebody once, where before I ever took a trade, I took a picture and I wrote whether or not I was going into a termination condition because I knew that was my problem. And just a reminder for everybody, not just Cream White here, is so starting at 9 a.m., everybody starts posting pictures over and over. Everybody starts posting pictures while I'm talking about rules, while I'm going through advantages, while I'm doing all that. So in the interest of fairness, I'm going to start at the top and I'm going to scroll down to the bottom. And I promise I'm not ignoring you. If I go, hey, that's all the pictures, guys, and I missed your picture, please give me that reminder. That helps me. But Cream White, I'm still an hour behind that 1026 timestamp, but we will get to it. And the cool thing is that if you pay attention to the feedback on other people's charts too, what you're going to find is there's some great lessons that may be applicable to yours. So Lenny, I hope that helps a little bit. I hope going through and talking about those advantages and where they lied will help. And then once again, directly into, so now we found a pattern. Check it out, Lenny. We just found a pattern, right? There's those one-to-ones. Look where the triggers are and look where the large triggers are. And look how there's nothing inside of favorable large triggers. It is the exact same trade going the other direction. Guys, this is the magic of posting in the room. Because not only do we identify the problems, but we start to recognize patterns, right? We're recognizing patterns that are removing our advantages. And now, Lenny, what I know without question is you're excited to be in a short trade with that momentum. You're excited to be in a short trade with your small chart down. But termination conditions appear to be your issue right now. Termination conditions seem to be taking you out of winners and putting you in losers. And rule number 3 is just a little bit too. And guys, I'll never tell you whether to trade your live money or whether you should be on simulator, but I can tell you that if we talk in the room and you're having troubles, simulator is a great place to work your way out of those troubles. Simulator is a great place to get these little things out of the way without putting your live money at risk. You do what you want. There's no reason to lose money while you're learning unless you just have so much you don't know what to do with. But that's 2 for 2, Lenny. Let's start working on termination conditions. So I want you to start asking yourself, did price reach an area? Did the trigger lines break? And you're going to find yourself avoiding these quite a bit. All right, Safia. Smalls are below the large. Smalls are below resistance. You're in a range-bound market. So you're taking that immediate momentum to get up to the trouble spot. Guys, this is how you can use your chart reading to take advantage when the market is clearly range-bound. You're not looking for home runs. You wait for everything to agree, and you get the hell out at the area that's held 5 times. Safia, picture perfect. Picture perfect. Nice job. That is some outstanding chart reading, taking advantage of a range-bound market. And then Derek, are you still in here? Did that little link help you out on the one-to-ones? I hope so. And then Daryl showing us that termination, odds favorable, hasn't reached anything. And there's one of those instances where you may fudge, right? It's not favorable large triggers, but it's large triggers in an area with every advantage. And Daryl, you do that one picture perfect. What a great trade. All right, Safia, all the momentum, super clear path, pull back to the one-to-ones, you get it. And then Safia, momentum in, momentum out, right? We found your pattern. Hi. Didn't we find your pattern? Cool. So I told you I was going to do this. Let me do this for you. If I'm in a trade, all right, so Safia, if I'm in a trade and I've reached an area, I'm doing it right now. And let me see if I can find a live example of it. All right, let's say hypothetically, if I'm in a long trade, Safia, and I'm saying if divergence prints, I want to get the hell out of this trade, right? See the reversal bar? Divergence will be true 2 ticks below this reversal bar. So hopefully it does it for us. Here's my reversal bar, 2 ticks below it. 1, 2, boom. There's your divergence. It keeps you from having to process so much. That loss of momentum will be true by the third bar. So 2 ticks below a reversal bar marker, you can get the hell out of that trade. Thank you, NASDAQ, for the lesson. It was right there, right when it needed to be. You're welcome. So hopefully that'll help a little bit with management and keep you from holding too terribly long on those momentum trades. Great job, though. Great entry, consistent entry, same entry over and over. And then Safia, once again, into the termination conditions. Strong trending market. And you know that it's into a termination, but with everything screaming down, you're trading right into the fib, Safia. Do I have an indicator to mark those 2 ticks? I don't, Snorri. But the reversal bar is on every chart that you have, so you'll be able to see it, and you'll just have to count the 2 ticks. 1, 2. And Safia, you know that I have to do it, right? Your plan calls for an entry here, not here. And guys, I'm going to do this when I know your plan. When I know your plan, I'm going to try to hold you accountable to it, right? And Safia's like, man, I've got the fear of missing out. No, no, PFI. All a reversal bar marker is, guys, all a reversal bar marker is, don't give things power that they don't deserve. Please, 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 please. It's just where the current bar is going to become a reversal bar. That's all it is. That's all it is. This bar will be a reversal bar at that line. That's it. This bar will be a reversal bar at that line. This bar will be a reversal bar at that line. That's all it is, guys. Don't overthink it. What I was telling Safia PFI is that if she has a rule that says if divergence prints on the third bar. So if I get a reversal bar and then 1, 2 more ticks, that divergence may be true right there. It'll stop you out. No, it won't reverse. What a horrible plan. It'll stop you out. If you're just putting your stop there, Safia, that's it. You'll move your stop. If divergence prints, it'll hit my stop. And it keeps it from you sitting and hoping. Watch. Boom, divergence print right on the third bar. If that was your exit condition, you can put your stop in place. Does that make sense, everybody? It's an awesome way For you to say, if divergence prints, I want to get the hell out of this trade. But did you see how fast that happened? If you had to react to it, you might react way up here. It just gives you a little advantage, a little heads up. PFI stops always go where the market should not, right? Stops always go where the market should not at a reversal bar marker. It so it prints PFI on a comparison between MACD BBs and price. That's all it is. You just don't see this. 20 years ago, you had to do the math yourself. And now Nexgen, it just does it for you because John said one day Mark's going to be a trader and he's not that smart. Not that smart to do the calculations. So guys, that's all that is. That's a way to use that reversal bar marker. If your exit condition, if your exit condition is divergence is true, it just gives you a visual of where that divergence will be true. That's all it is. Cool? I love it because guys, if I take, oh, let me find it. If I'm following the KISS plan, and my rule says if divergence prints exit a trade, well, then I can put my stop a couple ticks above that reversal bar marker, giving myself the jump on it, right? So if my management plan calls for an exit because divergence is true, that's how you're going to use it. And that's it. And then PFI, price went beyond the reversal bar marker there. So yeah, absolutely. Price goes outside of the window of, or stops go outside of the window of opportunity where price shouldn't if the trade's going to be a high probability trade. Great stuff this morning, guys. I love Fridays. You guys are shy all week, and then you're like, you know what? Let's ramp it up. And then Safia, where the market should not go? Not the reversal bar marker. Let's go to the lesson PFI. If I take, and then we'll come back to your Safia. If I take hypothetically, let me go to entries. If I take a long trade, if the market goes beyond that window of opportunity, PFI, that's where the market shouldn't go. Does that make sense? I think that you answered your own question. Okay, cool. So that's what we're doing. So I'm not using reversal bar markers. I'm not using anything. I'm simply looking at where it is beyond where that bounce point is. So you can use this for management as well, right? So PFI, let's say you're up 200 points, right? And everything's going, and you're like, I'm just going to hold this one to the end. And you know that the market's going to fluctuate up and down, right? So you might say, I'm up $1,000, everything is great. I'm going to put my stop where the market shouldn't go to see if it bounces and continues in the direction of the trade. There isn't a predetermined amount. I like to give it 4 or 5 ticks personally because I want to give it room to marinate, and it depends on the market as well. NASDAQ overruns more than crude and the ES do, right? My typical initial stop is 12 to 14 ticks. And a lot of times, even if 12 to 14 ticks, no, PFI, you might as well hit reverse because you hate money. Yeah, so let's not throw statements like that out there. You shouldn't hit reverse, ladies and gentlemen. If you get stopped out of a trade, it still might do everything the trade was going to do. It may have just run a couple ticks beyond it, right? And that happens sometimes. Sometimes you're going to get hit to the low tick. You're going to get hit outside of the window of opportunity. You're going to get hit, and then it's going to do everything that you thought it was going to do. And you're going to be all sorts of upset about it. MB, hey, Nice to see you in here. All right, Safia. Wrong side, right? For a momentum trade, you're in on the wrong side. But that's okay. Everything says up, you're into a termination, right? Let the bars break and then pull back to it. That's okay. I think Safia, yeah, Jared, everybody will. Everyone thinks, well, this one didn't work, so I'll reverse it. And then it does exactly what you thought it was going to do, and you get run over. Um, just for consistency's sake, Safia, you're a termination condition 100%, and you entered the reversal bar off of it, right? So now we're refining entries. You're doing amazing work. You're doing strong work, and we're just refining entries. We're just getting to the point to where you're taking that same look every time. Every time it's the exact same look. Every time it's the exact same advantages. And I lost my place, so let me figure out where I am. We are beyond that, Daryl. We saw that. Did we get these, Safia? Yep, we talked about that. So that is your entry, very much. Dwight, did we look at yours? Let's take a look. 1002, Dwight. You entered at 45.29. You sold 62.50 again. You placed your sell limit against the large triggers. This is your first time placing a sell order above price. So you had an order waiting up here, I'm assuming is what this means. And it just didn't get hit. But that's great. That means that you're waiting for the pullback to the area. So do you see how your area on this one, that's your mid band, that's your resistance inside of favorable large triggers. 62.50. You entered at 45.29. You sold 62.50. Okay, Cream White, do me a favor. It's going to help me so much to help you out. Right click, data series. On your entry chart, plot executions. Please, plot executions so I can see where you're getting in, so I can see what you're doing instead of trying to decipher it from words. It turns into an algebraic word problem for me, and I failed college algebra 4 times. If you'll plot your executions on your entry chart, oh my gosh, you're going to keep my brain from hemorrhaging. It's a personal favor to me, please. And then I'll be able to see where you got in, and I'll be able to see where you got out. And it keeps me from having to read the story because I'm not good at it. I've realized this with people's charts. I'm not good at figuring out where you did what. Because 62.50 gain, but you entered at 45.29. So you entered directly into a termination condition on the wrong side of everything is all I can assume. Right click on your small chart and go to data series. And then once you get to data series, scroll all the way to the bottom and hit plot executions. And this will let me see exactly where you got in. So when you have that text and marker, let's say hypothetically I go short, right? It shows me the price, right? It shows me exactly where on the bar I got in. And guys, don't fight uptrends, please, even with a red line. And it shows me exactly where I get out. So now when I come for a little bit of feedback, it's going to help me quite a bit. It's going to give me the opportunity to see exactly where everything is happening. And when I can see that, we can talk about advantages and disadvantages, and I can be a lot more precise with the feedback that I give you. Cool. Thanks, man. Whoops. All right. Sophia, we saw yours. Snorri, Jeremy, bum bum bum, cream white coming down. And then Snorri, we talked about that one. That the more you learn your rules, the more you'll find a way to take advantages and turn them into trades. Green background on the 13-2. Green background on the 5-1. You placed your buy limit inside of large triggers because red bar were coming down with a green background. Entered at 34.25. See how I don't even have price bars over here? Sold for a $75 gain because the green bars went into the red background. Man, cream white. Go back to this trade and show me what you did. So if you entered at 34.25, see how I have to line it up. I don't have price bars over here. I don't know where 34.25 is on this chart. Does that make sense? Because this may have been an outstanding way for you to make a lot more money. It looks like everything's kind of going the right direction. No, it's not a bad. It's all part of the learning process. Guys, sometimes I have to tell you I need you to do this, right? And it's not because I'm upset that you didn't. It's because I want you to get the best feedback. And this is one of the reasons too, while if I could have seen the prices over here, it would have been easy for me to line it up. And then I could have at least had a better guess on what things were doing. But it looks like you're trading with trend and it looks like you're trading with momentum. And I do feel obligated to remind you that while recognizing the trend background is a good thing, it's not necessarily one of your rules, right? You're just trading with it because it gives an advantage. And then Jonathan, I believe this was Jonathan. Ba, 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 ba. Yep. So you're breaking through an area. You're trading the breakout essentially. Support holds. Every trigger is angled up. You let it clear resistance and pull back to it. You and Safia are in cahoots. And you take it right up to that beautiful spot. Really nice trade, Jonathan. Great chart read. Every chart agrees, and you take a calculated risk on the breakout. Really well done. Not a high probability trend trade, but an awesome chart read. And then Snorri asked, is this that gap theory that you're talking about, Mark? And this most certainly is. Even off of a termination condition, price reaches support 1-to-1. The large triggers remain above the reversal bar marker. PFI, this is another way to use that reversal bar marker on your largest chart. If your large triggers are above it and price is hitting a mid-band or fibs, it's likely to close that gap. It does very often. It doesn't every time, but it does very often. So often that shorts caught in this like vacuum typically get run over. Snorri, great recognition, taking the lesson and being able to apply it instantly. Good morning, Andy. Andy, you have 3 divergences. And when you get 3 divergences, you jump in and you're able to get paid. I like it. Are you guys, can you still hear me? Cool. Andy, are you in here? Did you jump ship? There you are. Andy, I like it. You're trading with the trend. You're trading with momentum. You're letting 3 divergences say, you know what? The market's likely to push down, right? And when it did, you enter. This is where, are you looking for a momentum style kind of giddy up? The only challenge with this one, Andy, is you're jumping in right at the area that's likely to cause a bounce. Um, and I like the idea. I like the advantages. You let everything roll. It's good. But there's such a big gap back to these triggers. There's such a big gap, and your large triggers are still above resistance. And you can see what it did. It did push down, and I like that you got paid, and I think your exits are outstanding. Debbie, enjoy your long weekend. I guess the only question I would have, Andy, is where did you put your stop? These are the ones that confuse me personally as a trader. I like the look, and I know that you understand that you're probably going down to that mid band because of the divergence, because of the three divergence. So your stop is up here above the mid band. So in at 34, up above the mid band, 38.50. So okay, so you had it up here all the way at the triggers, above resistance. I like it. So you had a plan. You had a plan to take advantage of the momentum. There you go. That's all I ask, guys, is have a plan. Plans are amazing. Plans take the emotion out. And there's Ron's plan. Termination, full reversal, odds favorable, clear path, jump in, jump out. Notice how the back of his bar clears. Great job, Ron. That looks more like you. And then, guys, a couple years ago, I went to the motorcycle races at the Circuit of Americas. Had a blast. And I had a gentleman tell me there, he's a next-gen trader, and he told me, he said, hey, he goes, I spun my wheels with Nexgen until I wrote a plan. And MB, I don't know if you're still in here. And hello, it's great to see you in the room. There's a short, and he gets paid. Everything says down, and there's his next short. And he gets paid, and he uses market flow better than anyone that I know, right? Um, Here's the cool thing. PFI, if you're going to go to Apex, they're going to give you everything that you need. Keep it cheap. But guys, this was probably one of the best conversations that I ever had with a trader. Was hearing that he had the support, and Mark is a brilliant person. And he told me, he said, until I actually wrote a plan out, it was difficult for me. And once he wrote that plan, doing outstanding. And guys, everything is momentum led by the big chart. Everything is clear path led by the big chart. And he's just using this for a refinement process to get in to take care of it. Beautiful trading, MB. And I can tell you right now, no, I'm glad that you did. It's good to see you. You know, I've watched one race this year. That's it. I am so far removed from motorcycles. Makes me sad. But I think we're moving back to Austin. So I'll see you at the next MotoGP races. Great trade. And the idea, guys, is that you can have a plan. And when you have a plan, things come into place. Is this a good bottom? Snorri, great question. Can I answer it on a couple different levels? I'm going to start with, is this a good bottom? Is it a termination that creates a full reversal? Absolutely it is, Snorri, 100%. 100% that fits the criteria for a good bottom. Great job. And then just my little reminder, and you didn't ask the question, but that good bottom is great right up to a termination condition, right? So just because you're coming from a strong bottom, just because it was a termination condition that created a full reversal, doesn't mean that you have carte blanche to go to the next level. What it means is that this great termination condition got you right to that termination condition, and this termination condition got you right to this one. So we're going to look for our opportunities in between the two. And Snorri, that was that gap theory that didn't come true that particular time. Great job on the questions, guys. Great job. Keep asking questions. And then Ron taking advantage. Since divergence loses momentum, you waited for the market to begin to move back in the direction when this chart said yes. I like it. Doesn't have to be big, right? 26.50 to 24.50. That's a $300 trade. Guys, you will never starve if you're taking $300 of the market. And it doesn't have to be a $300 move, right? And Ron, I'm going to just expand on that idea for traders. Watch this. Guys, if you have every advantage, this is a $50 move. Ron's like, I made $300. Ron made $50 on one contract. Ron made $300 on the 6 that he traded. He could have made $500 on a 10 lot, right? And see how this goes? That exact same trade with his advantages, just it's contracts create more money, guys. Contracts, not more trades. All right, Cream White, thank you for this. So 28.50, 28.50. Everything says down, everything says down. You take the pullback just below the mid band. Oh, and it got you. High ticked you. And Dwight, I don't know if you understand how great this is. Oh, thanks, PFI. That's okay. But check this out. So Dwight, you take the pullback to resistance inside of favorable large triggers. I like your entry because this chart said go. And you did get high ticked. And guys, this happens sometimes, right? You're in at 31.75, you're out 34.75. This is going to happen every now and then. Hey, good morning, Elvis. And at this point, you don't know whether it's going to keep pushing up, right? This is why we don't reverse on stop outs, guys. You don't know if it's going to keep going up or if they're just being a jerk, right? But then all of your triggers turn, your small triggers turn, and you take that stab back when every trigger agrees with this chart. This is a beautiful continuation entry. And it takes you all the way down to your target. You make some money. You let the areas break. They're breaking right here with that momentum. And then this right here, rather than right here, that pullback to the one-to-ones is a very conservative entry. And then look how this one pulled right back to resistance inside of favorable large triggers. So you missed the easiest trade, which is totally cool. But then we come down here with weak triggers at support and divergence and weak triggers, and you take your entry. But at this point, we're struggling a little bit. We've lost momentum. The triggers have returned. The large haven't broken through. Your small chart says divergence, which is a loss of momentum. Your small chart has triggers inside, which is a loss of momentum. And this becomes a little problematic down here without the advantage of momentum. Up here where that momentum was strong, these were pretty effortless to keep the market going down. Does that make sense? Yeah, but I wasn't able to really talk about the last ones. Notice how when the momentum is strongest, the market keeps moving. When that momentum goes away, it's less likely to keep moving. Little bites with a big fork. I like that, Ron. I'm going to use that. Little bites with a big fork. Easy money, multiple contracts. Great job. And great job. Thank you for putting those on there. It's so much easier to give feedback when I can see where you're coming from. Great job, everybody. We made it through pictures. If I missed your picture, now's the time to let me know. And then Cream White, there's those weak triggers coming through, right? It gives it a little push down, but without that momentum, this is where you start to see those fluctuations around key areas. With the absence of momentum, we tend to see fluctuations around key areas. From termination to termination, and now we're waiting to see if 8509 breaks. That's all we're doing is we're chart reading. Guys, that's the second hour. Fantastic work. We're going to go into the third hour, and you guys are going to tell me what to talk about. Elvis, you know I'm not the tech guy. If my charts are 100% frozen, especially NT7, make sure you're on the right contract. So let me ask you first, whichever market you're trading, are you on the most current contract? Because if it's been a while, you want to make sure which market are you trading? You are on the most current contract. So the second thing, if my market isn't moving, am I connected? You're not answering the. Are you connected to live data? Are you connected to live data? You said that it's frozen. Okay, thank you. We have to go through it, right? PFI says they're having issues. So it's building the same chart as always. Ready? File, new, chart. Well, you told me it's frozen, so I assumed it was important information. There we go. So take a picture of this one, file, new chart. That's the first step, and this is going to get us to the chart building process. That's the first one. I don't know if it'll let me take the picture. Let's see if it does. Let me take a picture. Nope. It goes away if I try to take the picture. I'll let you type. I'm not worrying about frozen. Are you asking for a 90-second template? Is that the question? Oh, good Lord. I have absolutely no idea. So I can tell you how you can find out. Let's see if we can do this together. I love it. Let's go to resources and let's go to, that's 8. Is there a 7 upload? If you need to reinstall NinjaTrader 7 indicators, they're right there. So I'm going to go to my NinjaTrader 7 real quick because why are you, okay. You need it for 8? Okay, my templates are current on 8. 90-second chart. 13 small, 8-1, 8-2. So you can use a generic range bar chart. You can use a generic range bar, generic Nexgen dynamic Rinko bar. Elvis, I think this is the one that you're going to have to use for a 90-second because there is not a second chart specific. There is a 240 minute, and maybe you can whittle that down, but I think a generic Rinko bar chart, and then it'll work its way into that 90-second, and then you should probably be able to apply your indicators. But again, as much as it pains me to admit it, I'm not much of a tech guy. Elvis, I don't know. He doesn't include me in any of those decisions. Um, he'll probably be back on Monday. He's got a little family emergency going on. But Jason would be a much better source of information for this, and I apologize for not being more helpful. But I am so not the tech guy. I'm really good at reading indicators. I don't understand the programming or outside of the norms, and I've made a point to not worry about it because my my priority is always chart reading, and John does my tech stuff, and Jason's my tech guy. And I couldn't even begin to tell you how to make a template. And I've never used a second chart in my life. And I apologize. Okay. Jason is. He's a busy guy. So you might have to be a little patient. He won't be tied up all day. You just won't get your answer right now. Right? Sorry. And I really do. I truly apologize. I know that that's probably frustrating. You want to be in trades, but you don't have the tools that you feel you need to take those trades. I would try building it. I would try building it with that generic Renko bar chart and then applying your indicators to it and see if that's the chart that you're looking for, right? Build it 90-second. So if I were going to do that, even on 7, I would go File, New Chart. Whoops, wrong one. File, New Chart. And then I would do, let's say, for example, crude. And I've got my Renko bar, right? But I don't want that. I want a second bar. So I'm going to take a second bar, and the value on my second bar will be 90. I hope I'm doing this right. And then I'm going to use the generic. Any chart generic. So let's see what this looks like. And you do have generics available in 8. And Ron, I'm guessing here, um, or Elvis, I'm guessing here. I'm just trying. I'm trying to be helpful with what I have. And of course, I put it on crude oil 9 instead of 10. So let me go through that process again and we'll see what it looks like. Yep, I just realized that, Ron. Monday's a holiday. Have you checked the CME calendar to see if trading is happening? Typically, the markets are closed on Labor Day. Um, so if they're closed, there won't be trading. But I love education, guys. I'll talk to John and we'll see what happens. Elvis, this is what came up for me. That's that generic Renko bar. It's 90-second. I've got fibs, I've got triggers, I've got one-to-ones, I've got divergence. It appears to have everything that I need. Is that what you're looking for? I might have learned something today. Ron, I'll double check with John and we'll find out for sure. Oh, shoot. Who knows? My wife's working on her MBA right now. We high five every now and then. Elvis, does that help? That's what my 90-second looks like. And then if it doesn't look right, I guess we can try. Oh, look at that. There's a 90-second market flow chart in 7, but I don't know if that template is going to work in 8. I don't appear to have it in 8. High five. That's so there's a 90-second with a market flow chart in 8, Elvis. I don't know if you're still in here. All right, but you did hear me when I said I'm not a tech guy, right? So where it says load template, it's this drop down right here. Do you see where my mouse is? It's this template right here. This drop down is going to show you all your templates. And if the template isn't there, then we have exceeded my area of expertise, and you'll have to be patient and wait for Jason. All right, Lenny, just making sure you understand this. Your short failed because the large triggers were not that strong. There was a large gap between the small and trigs with the one-to-ones in between them. Lenny, can we start with all of those? All of those were contributing factors. All of those were contributing factors, but let's keep it basic, Lenny. Let's keep it simple. Let's keep it focused on the absolute easiest approach to keep you out of trouble. And that's rule number 2, my friend. That is termination conditions being false. So before anything happened, before any of these one-to-ones, before anything about these large triggers, price reached one-to-ones and none of the triggers broke through. And this is 100% out of the manual termination condition. So this was the biggest problem. Does that make sense? And honestly, Lenny, that can be enough to keep you out of this short. And then that's where you got the snapback. The fact that these triggers were so far away, it compounded this problem. Does that make sense? I love that you came back and asked the question. Thank you for that. Yeah, it's the termination condition on your large chart. And Lenny, here's the best part about what we do and how I teach it, is that if on your large chart the rules aren't met, there's no reason to look at your small chart yet because your small chart is just an entry chart. We use that small chart. Where's my mouse? There we go. We're going to use that small chart to refine the rules being met on the large chart to look for entry. So if the rules are never met because of termination conditions, you can really alleviate yourself of, no, you should, man, Lenny, do you know what I did this morning? Can I be honest with you? Can I be honest with the classroom? I traded into a termination condition. You know why? Because I hoped it would break. And I lost. And I lost quick. There is no buy now with trading, guys. There is a cyclical run. There is becoming comfortable and then taking a step back as there's more, and then it's becoming comfortable and it's taking a step back as there's more, and it's a process. But I find that the process becomes easier. If you're having any challenges at all, the process becomes easier when you keep it simple. The process becomes easier if you revolve around advantages. If you look for those three simple rules each and every time, whether those are the rules for the trade or not, if you let it revolve around the idea that momentum, a clear path, and an entry area create enough advantages to be successful, and then you blossom out from that point, life really does become easier. Does that make sense? I hope so. But Lenny, the lesson is great, and you understood the snapback. We're just using that large chart. Absolutely, man. Keep posting, please. Keep posting. Oh, and then that was for Ron. Ron, that was for you, man. There's your trading hours for the holiday. But that was for July, Lenny. And you're so welcome. And then Snorri, that's the sad truth sometimes. Sometimes there's just no entries. There's just no high probability trend trade entries. And that's why we say that 90% of what you guys are going to do during the day is sitting on your hands and waiting. 90% of what you're doing is just waiting for those advantages. So great recognition, Snorri. PFI, you ask what my thought process is. Well, I wake up in the morning and typically my thought process revolves around deciding whether or not I need to pee. And if I do, that's my first stop. And then my thought process goes to whether or not I'm hungry. And if I am, I'm probably going to eat. Just kidding. Let me show you exactly how I read a chart. Are you ready? Everybody? How does Mark Novak read a chart? So let's freeze it in the moment. First thing I do. Oh, my thought process was I'm a dumbass and I'm making mistakes. I didn't trade through a term. I got stopped out. You want to know what it was? I'll show you. I had a termination condition that created a full reversal. I had odds favorable momentum, right? And where I should have stopped PFI, I decided to look to my small chart anyway. and say, you know what, I'm going to take a shot because of this momentum, because of the term. And you know what it did to me, PFI? Exactly what it does more often than not. That was my thought process. My thought process was, I'm so damn smart and I hope it goes up. I'm going to ignore the fact that I reached an area. No, I didn't move my stop at all. I entered the market right here. I had my ass handed to me right here. No, I didn't. See, you're not listening. I broke my rules. I traded into a termination conditions. I didn't do anything right. Rule number 2, PFI. Rule 2 says no trades if price reaches an area and no triggers through. It is clearly spelled out. Don't trade in determination conditions, right? Why? Because they do this. Snorri, I didn't really enter long here. But this picture lends itself to the mistake that I made this morning, to the opinion that I had this morning that cost me money. Rule number 2 says don't do this. Rule number 2 says, guys, for the love of fuzzy, don't form the opinion that this Fibonacci area with no trigger lines through it is going to break. And that's the problem right there, PFI, is I thought. I didn't follow my rules, I thought. I inserted my will over my rules. I abandoned my checklist because of an emotional feeling. Does that make sense? So guys, if you went long right here because this was pretty, you broke your rules. No, PFI, it was me believing that I'm smarter than the market for a moment. I had a lapse in judgment. And because I had that lapse in judgment, it cost me $300. And guys, we're all going to have lapses in judgment. That's it. I don't have adrenaline when I trade anymore, PFI. I don't get sweaty palms. I don't get nervous. I don't get any of that. I broke a rule. I knowingly broke a rule because of the conditions around it, and it kicked my ass. And I think that the biggest thing is I'm not allowed to be surprised that I lost, right? I'm not allowed to be surprised that a termination condition reversed the market because I spend every freaking day reminding you guys that termination conditions can reverse the market. I spend every day identifying them with you and talking to you and trying to reinforce the idea that it's a safety issue, right? It's a safety issue. Don't trade into areas that may reverse the market. But guys, I'm human. And some days that little devil sits on my shoulder and I make a mistake. And I'm sharing that with you because some days that little devil's going to sit on your shoulder and you're going to make a mistake. And it's not the end of the world. And I sent that picture to my brother and I said, look at this nonsense. And he said, you know better. And I said, you're absolutely right, John. I do know better. But I made a mistake. He goes, dust off. Go take the next perfect trade. And guys, that's what trading is. It's a statistical advantage every time you get into the market. It's understanding that the conditions are so great and the patterns are so recognizable that there's the opportunity for you to win more than you lose. And that's all it is. But in the beginning, PFI, it may, Dwight. Not me. It would make me paranoid. Guys, you stop avoiding problems the more pictures you post, right? If you're trying to do it on your own, and Lenny, are you still in here? Can you imagine if Lenny didn't share a picture of trading in determination conditions twice? Lenny would have never gotten the conversation about trading in determination conditions. And it wouldn't have taken us to the conversation where you guys realize that we're all human and we make mistakes. But if you get feedback on what you're doing every day, if you get feedback on the trades you take, if you get feedback on the rules being met, oh man, you're totally good. It's legal where I'm at. It's no different than having a beer here. But guys, if you get feedback on everything that you do, you're going to get better. You're going to see more. You're going to avoid more problems, and you're going to move forward in your education. It's proven. It's proven over time. You just got to do it. You just got to do it. Ask those questions, post those pictures, right? So, good stuff. What do we see now? Termination, creating the reversal, odds favorable momentum. Things are starting to come together. We'll see what happens. I like humor. Price reaches Fibonacci high, even with odds favorable momentum. It's a termination condition. There it is again, guys. And look what it does. Terminations for the win again. But look at this. Termination for the win again. Termination for the win. Termination for the win. Terminations, terminations, terminations. How many times do you have to see it until you believe it? Creamhead is now invited to Myrtle Beach. I love it. How many times do you have to see that termination win before you believe it? That's what new users have to work through right now. New users need repetition, guys. The patterns are the same. Odds favorable, everything down. Give me an order at the area right inside of favorable large triggers. And if it reaches support, cancel my order, right? That's it. That's all it is. Over and over. Repetition creates recognition. Keep it simple. I'm going to give you guys some homework as we go into the weekend. This is a video watch list, guys. You want to stay busy this weekend? You want to get a little further ahead? Download this watch list. It talks about great tops and bottoms over and over. John Novak talking about termination conditions over and over. Trend trades, 50-50 trades, parabolic trades, strong triggers, trading from the edge using a large chart. Guys, this is John Novak being as smart as he knows how to be in multiple videos. That's some pretty good watching material. Go through this trading plan. If you really want to get to where you want to be, guys, take these rules. Ron, take these rules and scroll back. I don't know, Safia, you'll have to watch the video. I have no idea what a parabolic trade is. I can't even spell parabolic, and it's hard for me to say. But John Novak knows, and he talks about it in that video. Elvis, I'm not the tech guy. I apologize, and I hope I don't seem cross. I have no idea. No idea. You have to go to Jason. And I wish that that wasn't my answer. But I teach people how to read indicators. But there is a 21 range. There's another 21 range. And these are the ones downloaded from the resource page. I have 1, 2 21 ranges on there. So you may need to read down. Then if you need it for CL, make a 21 range chart and use a generic range bar chart with market flow. That's what it's designed for. Here, let me zip this one for you. Use the generic. It'll work on any market, 21 range. Guys, take the weekend to study. Take the weekend to study entries. Take the weekend to take a lot of pictures. Take the weekend to go back, to scroll back on your chart, to look at potential entries, right? to say this is my potential entry. Take the picture as the market pulls back to support or to resistance inside of favorable large triggers. Does everyone see how the large triggers are not through? The large triggers have not broken through the area, therefore this area is not broken. Rule number 2 hasn't been met. But you're probably going to take that trade and post it in the room and we'll talk about it, right? And that's what we do over and over, guys. Over and over. And then Snorri. Assuming everything else is correct, how to enter here and not here. 2 different types of bars, Elvis. So Snorri, when everything is going down and you identify the area that you want to enter at, if it's a short trade, right-click on your chart and sell limit 2. So this is the order. This is where you're looking. I don't know, Elvis. Respectfully, I don't even know what a white stair step is. I don't know what that would be. So Snorri, I'll right-click and set my limit order right where I want to get into the market. How do you know to enter low instead of high? How do you know to enter here? And not, okay, I see what you're asking. So let's talk about it. Assuming everything else is correct, right? Assuming everything else is exactly the way that you want it to be. Let me find a picture for you. Um, and I'll explain exactly the reasoning behind it. And hopefully that'll help a little bit. Have a great weekend, Elvis. All right, so assuming everything is correct, and that's always the assumption, right? The assumption is that you have strong triggers and you have no termination conditions. Um, so we're going to use the idea of the window of opportunity, Snorri. And I'm going to take this picture to do it. Remember that the large chart, the momentum is its absolute strongest, right? So we have that strong trigger look that says that the market is likely to continue in the direction of the trend. And on the large chart, there's nothing in the way to create a bounce, right? So the path is clear. And those are always the assumption that those two are met. So when we create the window of opportunity, the areas, of course, are going to be from the highest point of support to the lowest point of support. So Snorri, how do I know where it's going to bounce from? That's the question, right? I just want to make sure that I'm doing it. How do I know where it's going to come from? How do I know if it's going to be the high one or the low one? I don't. Neither do you. You never will. You will never know for certain whether it's the high one or low one, Snorri. But because of the momentum, because of the clear path, right? Because of the strong triggers, it makes more sense. It makes more sense just logically to believe that small group that creates the pullback, that small tiny little group that forces the market to go down isn't going to be able to push it too terribly far against all that momentum. Does that make sense? That's why we put our limit orders at the top of the window for longs, because with all of the advantages in place, we have to believe that this pushback is struggling against a tremendous amount of force to the upside. Does that make sense? And then the second half of that is sometimes that small group gets gets a little steam behind them and they push lower. So by entering at the top, what you're doing is you're playing the odds with that momentum and that clear path. And you're saying to yourself, I don't know how much heartbreak I can stand hoping that it comes down here. It's easier to get in up here and be willing to put your stop down here where the market wouldn't go. I think that's a great question. And that's why when everything is perfect, it's the top of the window, right? So let's go to the next level on that one. As you grow with the software and you start looking at things, and you see that those small triggers start to return to the large a little bit, and you see that divergence is printing on a smaller, faster chart, because there's less momentum, you begin to say to yourself, well, that market might push up further, right? This area isn't broken. I'm looking at a loss of momentum, and it may push up further, and that's exactly what it does. And the same thing up top here. With this loss of momentum bouncing off of these fibs, it makes sense that that market's going to push down. And that's kind of the idea behind termination conditions. Those weakened triggers, that loss of momentum, the market has the potential to push lower, and it takes away the advantage. So absolutely awesome question. Thank you for asking that one. Because our fear of being run over keeps us from looking for the top of the window very often. The fear of being run over keeps us out of that best, keeps us out of getting in it at the most probable. And Elvis will tell you that when you develop a plan, you may look at 7 charts at the same time. And it may work beautifully for you, right? Elvis, that's your way. Your way isn't wrong, it's just yours. Your way would cripple me. It's too much information, too much for me to take in. But that's me. I understand my limitations. Guys, there's no right or wrong way to trade this software. But I encourage new users, before you try to think about 50 things, make sure you can be profitable with just a few, right? And most every trader that's experienced will tell you that it's easier to find trades when you look for specific trades instead of too much information. Elvis's brain just works that way. What do you guys want to talk about? That last break didn't happen. Your job this weekend is to study, ladies and gentlemen. Your job this weekend, go through this, go through my spreadsheet. Let me put it in the room for you again. Go through my spreadsheet and look at stuff, right? Look at stuff. All a funded trader is a trader with funds, PFI. Don't blow out, make money. That's a Sunday school answer. You ready? PFI, I'm going to give you everything you need. So the first thing, write this down, get your pen ready, is have a plan that has been proven to win more than it loses. That's your first step, PFI. Have a set of rules that has been proven to win more than it loses. That's the first do. The second do is when you follow your plan to get into the market, have a plan for management. That's the second do. Have a plan. Have a plan for entry. Have a plan for exit. Practice that plan repeatedly before you lose $500,000. So PFI, have a plan. What's it going to take to get me into the market? How am I going to manage that trade once I'm in? You ready for the don'ts? Don't break your rules. So PFI, you are very much a let me wait at the finish line and see what everything says later. And I get that. I'm the same way. You're trying to get to the end goal without going through the process, right? And part of the process is in order to get funded, you have to reach $3,000 on a $50,000 account. Your trailing threshold is $2,500. I didn't run the statistics on it, PFI. I don't know. I can tell you right now that if you can't get funded on a $50,000 account, you won't get funded on a $150,000 account. You won't get funded on a $250,000 account. You won't get funded on a $25,000 account. All of the trade copiers and replicators and multiple accounts and different charts aren't going to save your ass. If you can't get funded, if you can't make 3 grand before you lose 2,500 trailing threshold, nothing else matters, right? Then you need to go back to your plan and ask yourself, did I follow it? And I can tell you right now, the people that don't get funded are the people that don't follow a plan that wins more than it loses. Because if they did, they would be funded. The people that don't retain their funding are the people that break the plan the second they get funded. So it doesn't matter which one you do, have a plan and stick to it. I don't work for Apex, I don't work for TPT, I don't work for Trade Copier, I don't work for, who else is in there that I don't work for? I don't work for Rhythmic. I don't work for Tradeovate. What I do, PFI, it's the only one I've ever used, so I don't know anything else. What I do day in and day out is I help you guys identify advantages. What I do day in and day out is I help you identify momentum and a clear path and how to get into the market. And what I do day in and day out is give you feedback on your plan. That's my job. I'm not an Apex professional. I don't know all the questions. Guys, I'm not a tech guy. I don't understand all the templates. I can't build them. I can't create a file for your software. But what I can do without question and at the risk of tooting my own horn is I can do it pretty freaking good is I can teach you to recognize advantages on a chart. And you are the proverbial horse. I can take you to the water, PFI. I can show you the plan for success, but it's got to be up to you to execute it. It's got to be up to you to be consistent. It's got to be up to you to write it out, to study it, to practice it. I haven't met a trader yet that wins on emotion. So the do's and don'ts are simple. Have a plan, don't break it. Your plan should be proven to win more than it loses. Your plan should create a statistical advantage every time you get into the market. Your plan should be revolving around a proven approach to trading the markets. Does that make sense? And I know that that's the Sunday school answer, right? The Sunday school answer is stick to your plan. Have advantages when you trade. Be consistent. So PFI, if you open up an Apex account and you go through and you blow it out, they're going to charge you to reset it. They're going to say, PFI, you screwed it up, let's reset it, right? And then you're going to pay them that fee to reset it. So if you blow out an account 15 times in a row during the course of the month, it can cost you $1,000. So it floors me why people open up 15 or 20 Apex accounts. Even if it's funded, they're going to defund you. If you blow out a funded account, you're going to fail it and you're going to have to qualify again. Thanks, Elvis. Thanks for showing up and saying, hey, it's nice to see your face. So PFI, if you screw up and lose a bunch of money, they're going to kick you out and they're going to make you requalify. They'll let you try again over and over. They want your monthly subscription fee. They want your reset. PFI, I would guess that for every 100 people that open a PFI account monthly, there's probably five. There's like five maybe that stick to their plans and stay consistent, right? I've seen it in the room 100 times. And the most common reason for people losing more than they win is deviating from their plan. The most common reason. You get 20 contracts on 20. What doesn't make sense to you? So why would you blow them out? But people do that because PFI, people focus on the money, not the process. It does. It does. Wouldn't you rather do it for $36 instead of $360 or $720? Wouldn't that make more sense? Qualify on one. You can always add. Johnny Rocket, 20 accounts blown. Now you have one. It's the same trade, right? Guys, that's what you don't understand. All you're doing when you trade 20 accounts is inflating your ego. Because you have a $200 day on 20 accounts. You get lucky breaking your rules. And you're like, look at that, I made $4,000. I'm a badass. No, you didn't. You made $200 and you got lucky. Consistency is key, guys. So you entered at 21. So you entered right here, right? 80%'s great. Keep doing it. No, it's okay. This is great. We can talk about it. It's the end of the week. So PFI, keep winning 80%. Keep doing it. Keep doing it. Don't change your plan. Does that make sense? I don't need the math. It's okay. I believe you. Please don't show me the math. I hate math. Dwight, the triggers made it through. Triggers made it through. I'm sorry, PFI, math confuses me. If you're winning 80%, that's amazing, as long as your wins are bigger than your losses. If you're winning 80% and you're not making money, then you need to work on management, right? Then you're great. So don't worry about win rates. Win rates don't mean anything. There's too many variables. PFI, if you make $200 a day, you make $200 a day. I don't care how you do it, but if you can consistently make $200 a day, then you can consistently make $1,000 a week, which means that you can consistently make $4,000 a month, which means that you can make $48,000 a year, right? If you can consistently make $200 a day and you turn that into a 10 lot, well, then you can consistently make $2,000 a day. It's the process, not the end goal. That's it. You're focusing on the money, PFI. Focus on the process. Show of hands, who's sick of me saying that? Because I've told this to everybody that sent me a message. Everybody that said, Mark, I'm struggling. Focus on the process. So termination, you didn't enter the trade. You're talking about, but your arrow is up here, cream white. So let me see if you're talking about this right here. That's the termination. That's the termination. Is that right? Because bingo, perfect. That's awesome. Great read. Great read. That's okay. That's the perfect read. That is a termination condition. That is a sit on your hands moment. That is a, hey, the market has reached an area that may create a bounce or it may not. I'm not sure. So I'm going to sit on my hands and I'm going to wait. And it's either going to break or it's going to roll. Cream white, perfect. Picture perfect. I could teach a termination class with this picture. And it really can be that easy. Isn't that awesome? So use your squares too. Use your squares to show that termination. And then when you upload it to Screencast, let me grab it real quick. When you upload it to Screencast, Cream White, bring it over to your termination condition section and put it in there, right? So now you have a study guide. Whoops. If I can type, now you have a study guide. Textbook term. And now you can go back and take a look at it and you can say, hey, you know what? That's a textbook termination condition. I don't want to go short into an area where none of the triggers are broken. Awesome job. Great job. That's how we get to where we want to be. Elvis, your rules are the process. Your rules. Your rules are the process. That's it, guys. Your rules are the process. And if your rules aren't met, Safia, it's not your money, right? Yours is coming. If the rules aren't met, it's not yours. John used to give the analogy. If you walk into the bank and you say, give me all the money, they're going to tase you and hog tie you. But if you walk into the bank and you say, may I have my money, please? You're going to walk out with money. Your rules are your money. Your rules are your process. Your process will lead to the results that you're looking for. And that's it for me this week, guys. Great week, great questions. Don't find a trade. Just go wait for your rules to be met, right? Guys, we don't find trades. There's not a magical trade tree. No, PFI, you're absolutely right. But if you don't have the process down, the money doesn't mean shit. Pardon my French. If you don't have a way to consistently find those profits,